Hi guys, Harry Yotis here, professional trader for 20 years. I started my career way back in 2005 and still going strong today in 2026. Well, today I thought I'd make a quick video on one of my favorite stocks, UAMY, United States Antimony Corporation. I really like this play as a critical metals play. It's one of a growing number of stocks that I like based on the critical metals Trump theme play that I think has legs. So let's discuss why I like this stock and the process that I took in buying it. Okay, so basically this is an antimony company. Antimony is a very rare metal. It is used for a number of uses, primarily through military and some fire retardant type situations and used as an alloy. Okay, it is very rare. It is used, especially right now, because of the war that's going on. It is very, very important in the military-industrial complex type stocks. Okay, so these are the basic facts right here. You want to start with some kind of basics on antimony. The world production is about 100,000 tons. It's not a lot. China produces the most of it, 60% of it. The United States produces actually zero. Okay, I said it produces 3.5K tons, but that's because from secondary sources, from recycling like lead acid batteries and all that. But basically, primary production is zero. Okay, this is why this is important that Trump really helps and finances and incentivizes the U.S. domestic antimony production, because it's very, very important for the military-industrial complex, and the U.S. produces none. Okay, it produces 3.5K secondarily, but consumes 24K. 24,000 tons. So basically, 24% of world supply is consumed by the U.S., and they only produce about a little bit over 10% of that, of their consumption through secondary sources. So it is important that they really try to onshore this critical metal. Okay, and it's very expensive. It could range from $20,000 to $20,000 to $35,000 a ton, and it went as high as $50,000, like in end of 2025 when this spike was happening. So it is very, very critical, very, very fundamentally needed in the U.S. I would call it the U.S. supply system, or for the U.S. military. Okay, so let's go over the chart of antimony, why I like it. Okay, after the big spike, we didn't really get into it here, but we wanted to enter the space on a pullback. And as you know, for commodities, you can have 50% pullbacks very easily within bull markets. Okay, it doesn't mean the game is over and it is a useless stock, whatever. Okay, we like the fundamentals of antimony. This is the primary U.S. antimony company, so I want to be in it. So basically here, after a big move, they had some positive news in late November, so we bought it around this price, and we bought it via a very complicated option structure. Okay, and we, as you guys know, I like to buy options for the longer term. I don't like to go for the daily price fluctuation. So we bought a 3-month structure that was bought in November but expired in February. Okay, so when we bought it, it went against us immediately. Then it came with us and then back down in the middle. Okay, so over 3 months, very volatile, but basically closed at the price that we entered at. And because of the, because of this close, because I bought it on November, but because of the expiry of the option structure in February 20th, we got assigned because we had a short put going on at 750, and the price closed below 750 on February 20th. You can't really see it here, but it was trading around 730-ish. Okay, so we got assigned shares at 750, which is exactly what I wanted. I had no problem buying these shares for the longer term, given these fundamental drivers and a critical metals play. So now, what do we expect going forward? Okay, what should we look for? Okay, as it was consolidating here and it ripped, I like this stock. Okay, because when we went to the high here, we created another high after this big high, and then it came back down. Okay, however, it didn't go all the way lower. It hovered within the middle of this zone. Okay, this big zone between the previous breakout point of 413 and the high here of 1190-ish. Let's say $12. So let's say $4 and $12 was a big zone, okay, a zone of consolidation. So what I'm looking for, because we had a high here, a higher low, which is perfect, I'm looking for a break above the $12. A break above the $12 will make this stock go to the highs, in my opinion. Okay, so it's very, very fortunate. I'm very, very happy that I got assigned at 750, exactly what I wanted, because now we could ride it for a higher move. Because when we entered the option structure here, it basically cost us $1. Okay, it was very, very good risk reward. We had like at least a 10 or 15x risk reward. So I'm not quite sure exactly what it was, but it was astronomical. We got a very, very good price. But now, because we got to assign the shares, we have a higher chance of profiting. I wouldn't say a higher chance, but the same chance, but now we still could profit off owning the shares, okay? Too bad it didn't happen before the expiry, but it doesn't matter. We're still going to benefit. So what I'm looking for, anything above the $12, we go to 19, okay? And it didn't break the 413 level. I would be surprised if it did, because this company is getting a lot of attention, especially under the war. And antimony is very, very sought after in the States. So I never thought it would go below the $4. If it did, I would have bought more. Okay. So what we're looking for, I love this lower high scenario, waiting above the 12 to go to new highs at 19, if it ever does that. Because right here, it's a pocket of air. So that's it, guys. I thought I'd make a quick little video about a company that I like and that I am long in, and what to expect going forward. And that is US Antimony Corporation. Thank you very much.